Ring a ding 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 dong. All right. Hello, hello, hello. It is Tuesday, March 7th. Oh boy. Oh boy. Oh boy. Oh boy. Oh boy. I didn't write any notes for today. I'm going to rant because what a day it's been. We had Powell in front of the Senate today, and yeah, I don't know about you or if you watched it, but that was one of the more doom and gloom type hearings I've ever witnessed, to be honest. And stocks made him pay for it. There was two in particular lines of questioning that I think really frightened the market. And one was Kennedy was asking Powell if he knew his inflation history, and then basically went down the road of, do you know what it takes to get high inflation back to 2%? And Powell kind of did his duck and dive on it because he knows it's a slippery slope on that answer. So Kennedy basically ran it down and said to get inflation back from 6-7% where it's been the last 2 years back down to 2%, unemployment historically anyways has gone to 10%. 10%. And at first Powell kind of goes, well, we don't see that happening. And he goes, that's what history says. Last 3 times we did this, 10% unemployment. And Powell goes, yeah, that's true. That woke the market up. That kind of slapped things a little bit. But it's still held in there until the end. Warren actually came out and was grilling him about it too, about, all these. So if it's true, we need unemployment back up to 10% to get inflation back down. You're okay with millions of people losing their jobs. And he goes, I'm not okay with it. But what's the alternative? High inflation is worse than high unemployment. I agree, but the market was not expecting those two things to be one talked about, two openly agreed to by Powell. I mean, those two alone should, and I think did, send some shockwaves through this market. The dollar went up huge. Rates actually rates were actually down a bit today, and the 10-year curve is the most inflated or the most inverted it's been, I think, ever. And they use it as a metric to see if we're going into a recession or not. We're in a fucking recession. Don't be fooled. We are definitely in one. And now it's a matter of how bad is it going to get. And currently, based on today's hearings, might get pretty bad because they've done very, very little to get inflation under control. And it seems like the next wave is upon us, and that terrified the market. But the rudest thing that happened, and I guess bulls kind of deserved it because there's been ruthless 0-day expiration, call buying, and put selling at key inflection points that have completely screwed sellers over the past. When did QE start initially? Decade and a half. I mean, it's been a long time. Anyways, Powell was all finishing up, and as the last senator started wrapping up her questions, the S&P actually spiked. It went from, I'm looking at ES, it spiked about 20 points. in quick order in about 3 or 4 minutes. And then had a big, there's a lot of buying, but it got met with even more selling, and then it came back down about 5, then a little bit popped back up, and it kind of hit these inflection points, these levels that I have here. And then it dumped, and then it kind of tracked around, and then it dumped, and then it held about 5-point range, and then it dumped, and then it held about 5-point range, and then there's a long, drawn out, rub your face in the sand and just keep pushing down. Sellers just completely put on a clinic today. And we're only down 63 points for the S&P, which we've had worse days on less negative news. So, I mean, ultimately, sellers did a ton of damage without completely destroying the market. And they just had their way with bulls. We closed under the 50. I think we're under the 20. I thought we were going to test the 200. We did not, but Powell is back. I think he's in front of the House now tomorrow, and they're going to grill him with more questions. They're all probably short the market, which is why they're asking such. I mean, ultimately, they're asking. This is one of like the best questionings of Powell I've seen. Wasn't too much grandstanding, but they have some good questions, and I think they exposed, just how peculiar or just how precarious this market is right now, and with the inflation where it's at. Things might finally be breaking here. I know I mentioned a few times, I think stocks are on borrowed time. I mean, if today was any indication, I don't know how anybody, to be honest, could have been buying today. I honestly don't. That was bad. Now BlackRock came out and thinks that the Fed has to raise the 6%. Goldman actually literally just hit. Goldman thinks terminal rate should be, they increased it about 1/4 of a point, so 5.5 to 5.75. Oh my goodness. I mean, what is the bull case? I don't think there's any bull case left. What is it? I don't have one. AI? I mean, I guess that might steal some jobs, right? That might lower or raise unemployment. We're like 2.7%. And we have some big numbers tomorrow. We got big numbers coming out on Friday. Tomorrow is JOLTS job openings, and at 7:15 non-farm payroll. At 9 a.m., right when Powell hits the floor at the House, is when JOLTS come out, and JOLTS is a big one. If JOLTS come out higher, meaning more jobs are available, we're going to the 200-day, which is, I think, I'll look it up here for you. S&P 200-day moving average, 30.40. And I think we'll be there quickly, so it's at another 45 points. And if that breaks, we're in trouble. I think we're in real trouble. 39.40. That's what we should be looking for right now. Rates in... Very cool. Come on. Rates in just 18 months went from 0 to 5. Well, they're 5.25. But now Goldman thinks they're going to 5.75. That's a dramatic rise. Now, when you have an economy that was built on 0% interest rates for call it 08 to 2021. So it's at 12, 13 years. Yeah, it's not all going to break. My dog's here. It's not all going to break at once, but that is a dramatic rise in a very short period of time. And I think, I want to say the market's starting to feel the effects, but I don't necessarily think it is. I think next wave is here, and I think we're about to, I think we're about to see some shit. I really do. Bitcoin's back. Bitcoin's back under 22,000. Again, it moves with the market. It's not independent. If that gets moving again, I could see 1,800. We talked about that yesterday. The thing about Powell is they asked him why 2%. And it's a great question. Because how did you come up with this arbitrary 2%? Why do you think inflation in the first place is good? Why is it that you think inflation should be, or core prices should be rising 2% every single year? Who does that benefit? And it's not the consumer, because wages have never really matched 2% annually. So who's it for? And then his response was, well, that's what we want globally. That's where all the other central banks agreed would be the best inflation rate. All right. Now the conspiratorial side of me goes, so we are moving towards one world government. Why should we care what other people's rates are? Why are we worried about everybody else? And I know the system's so intertwined and so connected, and we need each other for trade and all this other stuff, but at the same time, it's supposed to be friendly competition, right? Where we make products, we sell the products to you. You make products, we buy those products from you. Now, if we can make our products cheaper and better than yours, we're probably going to export more than we import. Obviously, we can't make good products. Actually, we make great products, but because we have minimum wage standards and work standards and all this other governmental regulation and high business taxes, manufacturing taxes, all this other stuff, everybody else can do it cheaper. Well, not everybody else, but China can do it for 1/90th of the cost. So obviously they're going to be producing way more, even though their quality stinks. They're doing it. Their margins are insane. So we import more than we export, and which makes us a debtor nation, which means we buy more than we produce. And in the long-term scheme of things, that is the worst position to be in. We rely on everybody else and their products because we can't make our own here. It's not viable. It's not a viable option here. We try. We offer subsidies and we print more money and we offer tax breaks to big corporations and we let them get away with stuff if they donate enough, which all just contributes to this inflation problem. It's a spending issue. And that's the part that I wish Powell would just be. He was asked if the fiscal policy in D.C., meaning Congress and the White House, is contributing to inflation. And he goes, no, I don't think it is. He's only saying that because he likes his job, and if he starts pissing off a bunch of Congress people, he's going to get fired, and he doesn't want that, so he's not going to blame them for it. They also asked him if the almost $32 trillion debt is sustainable, and he said yes. He said yes. All that debt is basically issued at quarter point, half a point, percentage point. And as this debt becomes due, and they are going to continue monetizing it, even though Bernanke said he would never monetize the debt, a liar, they're going to have to start issuing these treasuries at much, much higher yields. Now we're talking 4.5%, 5%. So what do you think that does to interest payment on treasuries? It went from 0 to 5% on billions and billions of debt. Trillions of debt. It'll be billions because they don't just issue $1 trillion in debt. They chunk it out once a week, twice a week, a couple times. Billions of dollars refinanced at higher rates. That's like the housing market right now. Everybody's in at 2.5%, 3%. Some chasers up in the 4s, 5s, and now mortgages are at 7%. And what has happened? No one's buying any homes anymore because 7% is too expensive of a mortgage on, even a $500,000 house. That's the interest payments alone are too much. So what happens when we do that with 32 trillion in debt? The debt's not sustainable. That was a lie. And the more we do this, the worse it's going to get. We can keep kicking the can and trying to hope for the best, but that it's not sustainable. It's not. And until we stop printing money and we stop implementing new programs, government programs, and incentivize EV makers with subsidies and tax breaks, and while upping the tax rate on middle class, and you're completely destroying the country financially. And every month that goes on, it gets worse and worse and worse. And there's zero stopping it. To be honest, today was probably one of the more terrifying hearings I've ever heard because of where we are in the market, because people are so complacent, because stocks are somehow still very high relative to, PE ratios. And I know I chirped about PE ratios the other day, but this might be, and again, who knows, if jolts come in, there's less openings, and then now if our payrolls have come down, then I don't know, maybe sentiment will change a little bit, but there is this giant black cloud over the entire economy, and it is spending and it is printing money. And until that stops, this is going to be one of the hardest inflation fights in the history of the world. It's just that simple. We're going to turn into Japan, where we own all of everything. They buy everything in the market. Their government just buys ETF stocks now, everything. That's what we'll become, and that's the thing is, people like to trash on capitalism. We're not in that. We haven't been in capitalistic economy since, probably '08. If they let those banks fail and we had to start fresh, we wouldn't be in this mess. If we adopted a more if we adopted a more sound financial plan instead of just printing money and handing it out to people or canceling debts on student loans that will only really help higher earning or higher economic status people, then I think we're in a world of hurt. There's a term I'm looking for, which is why I kind of lost my train of thought there. Austrian, that's it. If we adopted a more Austrian way of economics and ditch this Keynesian way where debt is king and government intervention is the way to stimulate and massage and manipulate a strong economy, then we also wouldn't be here either. If we allowed or opened up state borders to insurance companies so they can compete with each other over state lines, and didn't have strangleholds and monopolies in their state, insurance prices would come down. If we didn't give subsidies to EV vehicles, then Elon wouldn't have a monopoly on EVs. The natural way of market is competition. Competition creates better product at cheaper rates. If you raise minimum wage, you're intervening. It's Keynesian. You're intervening in the marketplace. If Google and, I'm just making up names, if Google and Amazon have the exact same job opening, and we have a strong educational system where we produce incredibly smart people, which we don't, it's failing miserably because Ukraine's more important and all these other things are more important, then Google's gonna, if they really want you and you're good, a capitalistic economy would say, all right, Google's gonna offer me more money than Amazon. Let them compete that way. Don't give some dog shit employee minimum wage because that's a basic human right. No, go learn some shit, offer classes, maybe have a free, community college system so these people can go learn a trade. Just giving them shit is not helping. Then there's no motivation there. Our government created the shittiest workforce ever. And yeah, labor market's tight because people are working 2 or 3 jobs so they can continue paying rent. That's what's happening. It's awful, and till it stops, we're only making things worse by the minute. And there's one other line of questioning, which is why haven't there been any Hispanic recommendations or Hispanic, what's the word I'm looking for? Yeah, representation inside the Fed. But the question they didn't ask was how many Hispanic members have applied or been potentially nominated to be in the Fed or looked at or worked in the Fed at a lower level. What's that number? If it's a high number, then sure, that's a valid question. But if it's a low number, and percentage-wise, say, X percent of our applicants are the people who are qualified for this job, I'm just going to make up a number, 90% white, then, and 5% to other minorities, then sure, 90% of the Fed is probably going to be white because that's where merit is. I'm not saying that minorities can't do it. It's just, you don't just, it's like minimum wage. You don't just give it to someone because of who they are. You give it to them because they earned it and they're qualified to do it. I think we've created literally the worst society in the modern era, and it's horrible. All right, I think I'll go on that one. Jolts tomorrow at the same time Powell is being grilled by Congress again. So that'll be interesting. I don't know if you'll see that data. I'm sure someone will drop him a note, but it should be interesting. It'll be interesting next 3 days, to be honest with you. And as usual, be smart, play it safe. I think today we had, other than that 20-point rally, maybe 5 points. S&P went up 5 points before it just got completely slammed back down again. Sellers are in complete control, and until data shifts that little mini sentiment for the day, then look for further downside. 'Cause I highly doubt Powell's going to say anything different than he said today. I don't know how he could flip from being a turbo hawk yesterday to back to a dove today. But I've seen bigger spines on shrimp. So that's where we are. Look for the 200-day 39.40. Keep an eye on Bitcoin. Just popped back over 22K. That is a big number, which is why it's tinkering around there so much. Rates. I don't even know what's going on with those right now. Crude is now $3.50 a day. Rotation. Our boy Enovix, ENVX, was green all day, strong as can be. I think they have news next week. CrowdStrike came out. They beat. It's up 4% after hours, but everything else is pretty much blood red. So keep an eye on it. Don't be a hero. All right, I'm out of here before I say something really stupid. All right, love you guys. Bye.